Hello everyone, this video is for CAFinal, SPOM, Set B, Strategic Cost and Performance Management. I know many of you have been waiting for my videos for Set B. Many of them are asking for me to make videos on Set B, so I am trying to slowly make it. This is a video in which we are going to cover practical sums of Chapter 2 in Set B SCPM in CAFinal. I hope this video will be helpful for you. In this video, we will be covering all the sums, practical sums which are in this chapter. So let's get into the topic. Before getting into the sums, I want to clarify one thing. For the sums, you need a lot of you don't need a lot of concept understanding and all. You need just a basic understanding of costing, and then you can easily solve the sums. But some concepts are relevant, which are you need to understand for solving the sums. Those concepts I will be covering in this video also. First, we will be understanding the concept. After that, we will be solving the sums. Only some concepts are relevant. Others, they are in the theory part. You can read it for theory preparation. In this video, we are going to see about practical part. First thing we have to see is that in this chapter, for understanding the sums and solving them, we need to understand the concept called cost of quality. For a brief introduction for cost of quality, we need to understand the background of production process, how production is happening in a company or a manufacturing concern, how they are producing. That entire process we need to know a little bit. First thing is they will plan the production. Before starting the actual operations, what they will do is they will start planning how much area we need, how much big building we need, what all the machineries we require, what all the production process, how much staff we want, what are the raw material that are required, from whom we are going to purchase the raw material, what are the prices at which it is available, whether any alternative raw material available. Like this, there are a lot of questions. These are all will be first decided by the management or the company before starting the production process. It includes quality planning. You should plan the quality, how much quality your product is going to be, whether it will be lasting for 5 years or you are going to make the product so much quality that it will last for 10 or 20 years. That lifetime you have to decide. That is the quality planning. How much quality you will include in your product. Design review. What is the design of the product? That also you should determine. Training to the employees. If you are hiring an employee for doing the job, you should give some specialized training. That also you should plan. Supplier evaluation. From which supplier you have to purchase the raw material. That and all you should decide. Then production process engineering. You should build the production process from scratch. You are now only starting the business. For that you have to planning. For that planning only you are doing now. You have to build the production process from day one. After doing all this, we have completed the planning part. After completing the planning part, we are going into the actual operations. In the actual operations, we already decided the supplier. From that supplier, we will purchase the raw material. After purchasing, we will get the delivery of the raw material. After the delivery, we will make an inspection of those goods, whether those are properly received, whether any damage is there, or is this as per the specification which we ordered. Everything we will check. After that, you will use the raw material in the production process. You will put it into the machinery and obtain output. It will do the process, the machinery will do the process, you will get the output. And that output also you will do inspection once again. Whether the output is properly manufactured, it is as per the specification, not damaged, that and all you will check in the output also. In raw material also you have to do inspection, output also you have to do inspection. And then if there is any defective product in the output, you will remove it and then you will rectify it. For rectifying you should spend some amount like rectification charges, like rework, scrap, that and all you have to separately incur. After that you will deliver the products to the consumers. And that out of the products delivered also, after delivering to the customer will send some products as returns. That is the sales returns for the company. Out of the product we deliver to the customer, some products are returned because of any damage or fault in the product. That also you have to obtain, and then you have to rework and resend the product to the customer. You have to bring the replacement. Most of the companies are having some replacement policy. If you send the product within this much days, they will give a free replacement. That also you have to do. This is the overall production process. And in this only we are going to say about cost of quality. Cost of quality means what? Cost of quality is the cost of performing activities to check the failure in meeting with the quality specification. When customer makes an order with us, we will be saying some specification. Like you have seen specifications for mobile phone and all. This much RAM will be there, this much internal storage, ROM will be there, and this much will be the capacity, battery capacity and all. You will have some specification. The company, what it will do, it will bring the products according to the specification which are expected in the market. The customer will give you the requirement. This much RAM I want, 4 GB RAM I want, 64 GB ROM I want. Like that, the customer will tell you. You have to prepare the product according to the specification and then send it to the customer. This is the main process. Here, what is the cost of quality? You are making some activities. In that activity, what are you doing? You are checking whether the specification which you manufactured are matching with the customer requirement. Customer requirement should be matching your actual product specification. If that matches, there is no problem. Well and good. If it is not matching, you have to make changes. That is what they are asking. For that only you are preparing the activities. For those activities, you are incurring some cost. That cost is called as the cost of quality. Matching customer expectation along with the quality specification which you are actually giving. What is quality? Quality means conforming to the customer specification. If customer asks for some specialized product, you have to give it as per the customer requirement. You have to strictly follow the customer requirement. You have to satisfy the expectation. What will the customer expect? He will expect to receive a good working product. There should not be any fault or damage in it. That you should satisfy. The customer should get the value for money. If these three conditions are satisfied, that is called as a quality product. If there is any problem in these three conditions, then it is not a good quality product. And in cost of quality, we have two types: cost of good quality and cost of poor quality. As we already saw, cost of quality is the cost incurred for making some activities in matching the customer expectation and actual specification. This model you are matching, for that you are incurring some cost. In that, they have two types. One thing is, we have two outcomes that we have a product after manufacturing. There may be two types: either it will be of a good quality, the customer will be happily buying it, or it will have a bad quality, the customer will be dissatisfied and he will not buy it. If you have to produce a product with a good quality, what you have to do? You have to invest a lot of money in the good machinery, and then you have to pick a latest raw material, you have to do many research and all, and then you have to make a lot of testing, and then inspection and all you have to do. After that, filtering, only good product you will send to the customer. By these things, you will eliminate the bad things in the product. If you are manufacturing a product which is bad, what are all the costs you will incur? You will not invest a lot of things in machinery, research and all. Anyway, you are going to do a bad product. What will the cost? What will be the major cost? You will have a bad reputation in the market because of your bad product. Because of that reputation, you will lose some sales, and out of that sales, you will lose the contribution. Loss of contribution is one factor, and then there will not be many sales from you, and then you will get a lot of sales returns. Many people will return your product because it is a bad product. You have to rework on it. That's all you have to do. If you opt for good quality, you have to invest on machinery, for research, for creating a good product, you have to invest the money. If you are creating bad product, you don't have to invest a lot of money for making product. Anyway, you are going to make a bad product. You have to face losses in these forms. These are the two types of things. That only they are saying. First thing is cost of good quality. If you want to create a good product, it is will be a different type of cost. If you want to create a poor product, cost of bad quality or poor quality, it is a different type of cost. That only we are going to see in detail. Here, cost of good quality is also called as cost of performance. What is performance? The customer is expecting you to perform according to the requirement and bring the product according to the requirement. That's all he is requiring. If you are doing that work correctly, it is called cost of performance. For that you are incurring cost, it is called cost of performance. If you are not doing the work properly and producing bad product, for that you are incurring some loss. That is called as cost of non-performance. The next thing is, in cost of good quality, we have two types: prevention cost and then appraisal cost. Prevention cost means you are avoiding the bad product. You are avoiding the bad product. For avoiding the bad product, what all you are doing? For that you are incurring some cost. That is called prevention cost. Appraisal means you are testing, evaluating. After producing, you are checking whether it is proper or not. For that, what are all cost you are incurring? That is called as appraisal cost. The purpose of prevention cost is that it is to avoid the poor quality. You should avoid the poor quality. Minimize the number of defects. How much product it is coming defective from the process, that you have to reduce. It is incurred before the actual operation. Prevention means avoiding. For avoiding that only, we are making a lot of research, quality planning, design review. That and all we are doing for avoiding the defects only, for avoiding the bad quality only. So these are all the things which will come under preventive cost. Quality planning, design review, training, this and all we are giving to avoid the bad quality. These all will come under the preventive cost. Here they have given the examples: quality planning, engineering, design review, training, audit, supplier evaluation. These are all you will check before the production process, and this you are checking to reduce the number of defects. This is related to design implementation and maintenance. These costs are relating to this activity of quality management system. You have a quality system in that you are designing, implementing and maintaining. For that you are incurring these costs. Next thing is appraisal cost. The appraisal cost, what is the purpose? It is for ensuring high quality and performance. You need to produce high quality products. For that you are doing this appraisal cost. The main thing in the appraisal cost is testing. You will test and evaluate the products whether it is properly produced as per the user requirement or not. That you are checking. It is related to evaluation of purchased material. Raw material you purchased, that inspection it will come under appraisal cost. Process, whether the process is properly working or not, that you are checking, that cost is also appraisal cost. You are producing products and services that we saw in the above chart, right? The output, inspection of raw material, these and all will come under appraisal cost. These are all incurred during the actual operations. Prevention cost is incurred before the actual operations. Appraisal cost is incurred during the actual operations. These are the two types of good quality. One is to avoid the mistakes. Another thing is to check whether mistakes are happening. Testing is the second thing. Next thing is cost of poor quality. In the cost of poor quality, we have two types of things: internal failure and then external failure. Internal failure means in the cost of bad quality, what you are doing is you are producing bad product. After producing the bad product, you are incurring some cost or loss. That is called the cost of bad quality. That bad product you are sending to customer. The bad quality product you are sending to customers. After producing the bad quality product, you are checking it in the inspection itself. Earlier we saw that there will be inspection of output. In that inspection of output, you are checking whether any bad product is came or not. In that, you are taking all that bad product and removing those from the total product. You are removing the bad product. After that, you are sending the good product only to the customer. In that, the products which you are sending to the customers also, in that some things will come return. Some goods will be returned because of bad quality which are discovered by the customer. In a bad product, there will be things called bad qualities. whether it may be any fault in the product or damage, or it may be not working properly, or it is not in the specification as per the customer. That are the bad qualities. There are two types of things in the bad qualities. Either you can find it by yourself, or the customer will find it and return to you. After you produce this product, you are doing inspection, right? In that inspection itself, you can find out and remove the bad quality. That is one type. After sending to the customer will return because of the bad quality. That is another type. If you yourself are removing it, it is called as internal failure cost. Yourself, you are making inspection and removing a bad quality product. That is called internal failure cost. For that, what all cost you are incurring, it is called internal failure. After sending to the customer, he is finding out the defects and deficiency, and then he is returning the product. That is called as external failure cost. In the internal failure, the company itself will find out the defects. This cost is incurred to rectify the defect before the delivery to customer. Before delivering to customer, you are identifying the problem in the product. The problem is there is a defect in the product. Because of error or inefficiency in process, there is a defect in the product. After finding the defect, what are you doing? You are redesigning, you are retesting, you are reworking on that product and rectifying the defect. After rectifying, you will send it to the customer. Internal failure, the defects and deficiency, you yourself found out, the company. Next thing is external failure. This cost is incurred to rectify the defects discovered by the customers. Here the customer found out the problem and returned the goods. Here the examples are warranty. There will be warranty policy of the shops and companies. The customers will send back the products. You have to give free replacement. There will be customer complaint, customer support, lost market share. As we already saw, we have to lose contribution because of bad reputation and bad product. That is coming under lost market share. This is the problems of cost of poor quality, external failure cost. These are all the four types of costs. Broadly, it is good quality and bad quality. In good quality, prevention cost, appraisal cost. Internal failure, the problems identified by the company itself and rectifying. External failure cost, the problem identified by the customer and then the products are returned. This is the basic concept which you have to understand. Now we can go into the questions. Now we are going to see illustration number 1. In this question, what they are telling is that there is a company which produces LED lamps. Here they are having a process. There is a process in that there are daily 5,000 units of inputs are going into the process. After going into the process, they have a rejection rate. That process is rejecting the products. How much it is rejecting? 5%. If you put in 100 units into the process, it is rejecting 5 units. This is the current rejection rate. And they are making a change in the quality control policy. By that change, they have to incur 15,000 rupees cost. For implementing that change, they have to incur 15,000 cost. After incurring, they will get a reduced rejection rate. The rejection rate will not be 5%. It will be reduced to 3%. For they will be incurring 15,000 cost. They will be getting the 3% rejection rate. 2% will be reduced. That is what they are telling. Whether this policy is beneficial to the company or not, they are asking. They will get 5,000 units into 5% rejection. So they will have 250 units will be rejected. Now it is 250 units are getting rejected. For 1 unit, the loss is 200 rupees to the company. It will be given in the question. You can read the question. 250 units are currently being rejected. For 1 unit, 200 rupees is the loss to the company. So currently 50,000 rupees is the loss. After implementing what they are telling, they will get a improved rejection rate. After implementing 5,000 units into 3% only, it will be rejected. So only 150 units will get rejected. For 150 units per unit, the loss to the company is 200 rupees. The loss after implementing the policy is 30,000 rupees. So we have a reduction in the loss. 20,000 rupees we are getting reduction in the loss. For this 20,000 benefit, we are making an additional cost of 15,000 for implementing the policy. Now the net benefit we have is 5,000. This is what they are asking in the first question. Whether it will be beneficial for the company. There will be a 5,000 rupees benefit for the company by implementing this. The next part of the question, what they are asking is that after implementation, analyze the maximum rejection rate beyond which the proposal ceases to be beneficial. What is the level after which the proposal will not be beneficial? That is what they are asking. Here, in the first part, we found out that current loss was 50,000. The improved after the proposal, the loss was 30,000. We got 20,000 benefit. This is the 20,000 benefit. For incurring this 20,000 benefit, we incurred a cost of 15,000. This 5,000 we are getting. This is called the net benefit. They are asking the level beyond which the net benefit will be 0. So the net benefit should be 0. The cost which we are incurring is 15,000. So for getting 0, what we should subtract from 15,000? 15,000 should be the benefit which we will be receiving. Now, this in place of this 20,000, we should get 15,000 benefit. The current loss which we are incurring is 50,000. For getting 15,000 benefit of savings, we should have a cost of, after implementing the proposal, we should have 35,000 rupees loss. Then only we will get 15,000 rupees benefit. If we get 15,000 benefit, the equal cost will be incurred, and then we will be getting a zero net benefit. The question is asking that at which level you are getting zero net benefit, beyond which the proposal will not be beneficial. No benefit is coming. So zero net benefit. So for that we are getting 15,000 savings. For getting that 15,000 savings, after the proposal you should get 35,000 cost. This is the logic. Now 50,000 we have current loss. We need a savings of 15,000. So what we have to do? The loss after the proposal should be 35,000. This should be the loss after the proposal implementation. For one unit loss, for your 1 unit defect, we are getting 200 rupees loss. The loss after proposal which we found is 35,000 rupees. So how much unit will be defective? We have to cross multiply and find out. You will get the answer as 175 if you cross multiply. What is the rejection rate for this 175 units? 175 divided by 5,000. The rejection rate is 3.5%. This is the maximum rejection rate, beyond which the proposal will give net benefit of 0. Again, I will recap. First, we had 50,000 loss. We had implemented the policy. After that, we got 30,000 loss. Now, the savings in loss is 20,000 rupees. For that, we incurred 15,000 rupees cost. Now, the net benefit we are getting is 5,000. This is the first part of the question. In the second part, what they are asking is, the net benefit should be 0. The cost incurred is 15,000. This we cannot change. So, the savings which we are achieving, the total benefit which we are achieving is, it should also be 15,000. For that to be 15,000, the current loss is 50,000, and then the loss after the proposal should be 35,000. Then only you will get the net benefit to be 0. If the net benefit is 0, the loss after implementing the proposal is 35,000. If it is 35,000, then we are getting 175 units which is rejected. The rejection rate is 3.5%. This is the solution. Now we are going to see illustration number 2. In this sum, we have a theatre. The theatre's name is Cineworld. It is in a region where there are so many colleges situated around the theatre. The theatre is dependent on the students coming to the theatre for the revenue. Nowadays, the theatre is facing a low sales because students are not coming and they are seeing movies on OTT platforms. So the theatre has low sales. For improving the sales, they are bringing a scheme. Under that scheme, they are trying to attract the students. What is the scheme is that they are identifying that a student on an average spends at the college 4 years time. A student is coming to the college for an average 4 years, which is the average duration of any course. They are introducing a plan where there is a nominal one-time subscription fee. The student, for visiting the theatre, they have to pay a nominal subscription fee. One-time subscription they have to pay. After that, they will get discounted prices for tickets for all the 4 years. Once they will have to pay a fees, after that, for 4 years, they will get tickets at a discounted price. By this, they are trying to attract the students. This one-time subscription fee they are collecting is that the amount is 5,000 per student. After the subscription to the plan, they will be purchasing the food and beverage, everything from the theatre also. From that also, the theatre will get the revenue. They will spend on movie ticket, they will get food and beverage, they will get souvenirs and accessories also. It will be sold in the theatre. That also the students will purchase. These are all the areas from which the theatre will get the revenue. For one student, one student will spend 2,000 rupees per year for movie tickets in years 1 and 2. The lifetime of this project is 4 years. For 4 years, they will give the discount on movie ticket prices. The student will spend 2,000 rupees per year on movie tickets on year 1 and 2, and he will spend 1,500 rupees on year 3 and 4 on movie tickets. Same like that for food and beverage, 4,000 he will spend. 3,000 he will spend on next 2 years. For 2,250 he will spend on year 1 and 2, 750 he will spend on year 3 and 4. One more thing is, only 50% of the students are expected to visit the theatres in year 3 and year 4. If 100 students are coming in year 1 and 2, only 50 students will come in year 3 and 4. And only 75% of the subscribers who are expected to buy food and beverage. If 100 students are coming, only 75 will buy the food and beverage. If 50% in this 50 students are coming, out of this, only 37.5 students will buy the food and beverage. Only 25% of the subscribers are expected to buy souvenirs in year 1 and 2 and 10% in year 3 and 4. If 100 students are coming, how many will buy the souvenirs and accessories? Only 25 students will buy. If 50 people are coming in year 3 and 4, how many will buy the souvenir and accessories? Only 5 people will buy the accessories in the theatre if they are coming in year 3 and 4. This is the weight which we have to assign to the amount. This is coming across a lot of years, year 1, 2, 3, 4. So we have to consider the time value of money. They have given the discounting rate at 10%, the annuity factors they have given. For this 4 years, from one customer, how much we are getting the value? That is what they are asking. Now we are going to see the solution for illustration number 2. Before that, we have to see one thing, the weight which we have to assign for the cost. For movie ticket, year 1 and 2, 100% revenue we will get. But in year 3 and 4, only 50% will visit. So you will get only 50% revenue of the movie ticket revenue. In food, 100% people when visiting, only 75% only 75% people will buy the food. So only 75% will be the revenue which you will get from food. In year 3 and 4, only 50% will visit. Out of that, only 75% only will buy. So effectively 37.5% revenue only you will get. Souvenir and accessory, 100% will visit. Out of that, 25% will buy this. So 25% revenue you will get. Year 3 and 4, 50% you will be visiting the theatre, but only 10% will buy the accessories. 5% revenue only you will get. This is the important thing which we have to understand. Here, year 1 and 2, 2000 rupees is the movie ticket revenue for one person 1 year. This we will get 100% in year 1 and 2. And in year 3 and 4, the ticket revenue per ticket is 1500 per year. In that you will get only 50% because only 50% are visiting the theatre. Next thing is food and beverage. 4000 is the expense per year per student for year 1 and 2. In that you will get only 75% because only 75% people will purchase the food. In year 3 and 4, 3000 is the expense per student per year. You will have only 50% students attending, that you have to multiply. Out of that 50% students, only 75% will buy the food. That also you have to consider. Accordingly, you will get this amount in the food and beverage cost, food and beverage revenue in year 3 and 4. Souvenirs and accessories, 2250 is the expense per student per year, 25% only will buy that. So this is the revenue you can expect. 750 is the accessory cost. In the year 3 and 4, only 50% will attend, 10% only will buy. Considering all these, 37.5 is the expected revenue of year 3 and 4 for souvenirs and accessories. Now we are going to total these. Movie ticket, food and beverage, souvenir and accessories. For both the years, we are getting the total revenue which we can get. This is per year. In year 1 and 2, you will get this per year. Year 3 and 4, you will get this per year. Here, this is the table here, initial cost. They have given in the question that the theatre will incur a cost of 5,000 net of the subscription fees collected for introducing this program. The theatre company will have a cost, no, that you have to consider along with the subscription fees collected from the students, one-time subscription fees. After adjusting that, you will get a 5,000 net expense. The theatre company has to do this expense one time for implementing this program. This is per student. 5,000 is the cash outflow for the initial cost for theatre. This we are calculating in the theatre point of view. So 5,000 is the cash outflow. This is incurred in the present time only. So the present value factor will be 1. It will be 5,000 present value for the initial cost. Next thing is, every year you will get the revenue. Year 1 and 2 you will get this much revenue, 5562.50. 5562.50, year 1 and 2. Year 3 and 4, same we will get the below calculated revenue. That revenue we are bringing it to the present value at by using present value factor at 10% discount rate, which is given in the question. This is in the present value only. We are not using any present value factor for the first thing. Second revenue, year 1 revenue, we are using 1 divided by 1.10 present value factor. Like this, we are multiplying the present value factor for each year and bringing the revenue to the present value. The total present value which we get is 7394 approximately, which is net of the initial cost which we are incurring. So this is the customer lifetime value per student. Over the 4 years lifetime, one student, we are getting this much revenue, net revenue from him. This is what they are asking in the question. That's all about this question. We have covered the illustrations in this chapter. Now we are going to see the test knowledge questions. In this, the first question is a theory question. You can read this by yourself. We are covering the practical part in this video. Now we are going to see the second question. We have a company. In that company, we are selling a product. Each of the box of its product is printed with the logo, satisfaction, guaranteed or your money back. This is the tagline which is printed on the box. The P Limited, the company, is having difficulty competing with the competitor. It does not have the reputation for good quality. So, there are high warranty claims. The CEO of the company would like to evaluate what costs are being incurred to ensure that the quality of the product is good. Following information is there. Currently, this much the company is spending on warranty, this much the company is spending on employee training. Those information are given. For the year 23-24, the CEO is considering spending on the following amount for a new quality program. They are implementing a new program. For that new program, this much will be the cost. Inspection, this much will be the cost. Production process, this much. Maintenance, this much. Like this much will be the cost. The next thing is, P Limited expects new quality program to save the cost by the following amount. These are all the savings which will happen by implementing the new quality control program. This much cost will be saved in each of the aspect. Now what they are asking is, prepare a cost of quality statement for the year 22-23 showing the percentage of total cost. Here, these two things that they have given is, it is for the year 23-24. But this table they have given, no, that is for the year 22-23. This we are asking in the cost of quality statement. So we have to divide it by prevention cost, appraisal cost, internal failure cost, external failure cost. Like that we have to divide this and present a statement. The second question is, we have to prepare a cost-benefit analysis of the new program. The new program, what are all the savings, what are all the costs incurred, what is the net benefit, that we have to say. Here we can divide the items into different categories. Warranty claims, it is the external failure cost. Because the product reached the customer, after that he is placing a warranty claim with the company because the product is faulty. Employee training, this is a preventive cost. Rework, this is an internal failure cost. Within the company itself, we identify the defect and doing the rework. Lost profit from lost customer, this is an external failure cost because of bad reputation. Cost of rejected units, this is a unit which has been rejected This unit has been rejected within the company itself, so it is an internal failure cost. Sales return, it has already reached the customer, so it is an external failure cost. Testing, as we saw, testing is always an appraisal cost. This is the division which we have to give in the answer. Now I am going to show you the answer. Here we have given the division for preventive cost, appraisal cost, internal failure, external failure. We have to divide them and give the presentation only. The total amount will be the same, the presentation will be different. This is the cost of quality statement. The next thing they are asking is impact of proposal. They are proposing the program. What all the additional cost involved is, they have given in the question itself. I have given it in a categorized format. I have divided what all the preventive cost, what all the appraisal cost. In preventive cost, there will be additional cost of re-engineering production process, which will come under preventive. Supplier evaluation, screening, that will come under preventive. Preventive maintenance, the name itself contains the word preventive, so it is a preventive cost. These all will come under the preventive cost category, and this much is the amount. The next thing is appraisal cost. For appraisal, it is a raw material inspection cost. For that, we have 1,20,000 cost. Total additional cost which we are incurring is 9,70,000 rupees. Now we have to see what are all the reduction in cost which we can achieve. We are going to have savings in cost in a rework. Rework, we will have less rework. The cost which will be reduced is 2,50,000. The amount, everything is given in the question. They have given the activity and the amount. I am just categorizing it into different categories. In external failure cost, reduction in loss to profit, it will be reduced by 8 lakh. Reduction in sales return, this much will be savings from that activity. Warranty cost also, it will be reduced by 3,25,000. Total, this much savings we can get by implementing the program. This is the additional cost which we are incurring. This is the savings which we are incurring. This is the net benefit from the proposal. Total additional cost, total savings, this is the net benefit. This is the answer for second question. Now we are going to see question number 3. First, let us read the question. A company produces and sells a single product. The cost data is given below. This is the cost data. The next thing is, the company has forecast that demand for the product during the 2024 will be 28,000 units. This is the demand for the product. Next thing is, there is no opening stock and closing stock of the product. Okay. The next thing is, stock level remains unchanged throughout the period. The next thing is, following additional information regarding costs and revenue are given. Here they are telling that some points, there will be some points which will be given here. What are those? We are going from down to above so that you can understand easily. 10% of the direct material will be scrapped due to damage while in storage. Generally, what is the process? We will buy the material. After buying that, we will convert it into finished goods. After converting, we will sell it to the customers. This is the general process. In that, after buying the material, 10% of the direct material will be scrapped due to damage. 10% will be going to waste. The next thing is 20% of the items produced. After becoming finished goods, 20% of the items produced will be discovered faulty before they are delivered to customers. As I told, after finished goods, you will do sales. But before sales, they will do an inspection and then find 20% of the items faulty and then they will scrap it. Next thing is, after sales, after selling to the customers, 12.5% of the items delivered, it will be rejected due to specification failure and will require free replacement. If you sell 100 units to customers and deliver them, out of that, 12.5 items will come returned to you and you have to give a free replacement. The cost of delivering the replacement item is 5 rupees per unit. For delivering, you will incur rupees 5 charges. This is the information given. Now what they are telling is that they are considering a proposal to introduce a training program which will reduce the level of faulty production to 10%. After producing, earlier what we got, 20% of the items were discovered faulty. But after the proposal, only 10% will be the faulty production. That 20% will become 10%. Next thing is quality control consultant they are hiring. For that they have to make a charge of 50,000 incrementally and then the percentage of faulty items delivered to customer is 9.5%. This 12.5% we have here, right? After the proposal, it will become 9.5% because of the quality control consultant. Now let's see the solution for this question. Here, this is the solution. In this, I have given the cost data. I have copied it as it is. The next thing we are going to see is the scrap of the material, how much it is happening, how we can calculate it, that we are going to see. Here they have given that 28,000 units is the demand for the units. Now we can take that it is the demand for good units. After sales, out of that, some units will be returned and then some units will not be returned. Now we are taking an assumption that this 28,000 units will be the number of units which are not returned. That is, it will be the number of good units. This is the assumption we are taking. Generally, this is the best assumption, but in question they have solved it using alternate assumption also. They have taken that the total sales will be 28,000. They have solved it in both the manners, but we are taking the assumption of 28,000 is the not returned goods. It is the goods which are good units. Now, we are going to approach the question. First thing is, we will have materials. We will buy the materials. For example, we can take that we are buying X number of materials. X number of materials we are buying. Out of that, 10% is becoming damaged in storage itself. Now, how much we have remaining? 0.90x materials we have remaining. After that, we will convert this 0.90x into finished goods. Now, what we have? We have 0.90x finished goods. After producing them, 20% of it is discovered as faulty and removed. We produced 0.90x, out of that 20% is removed. Now how much we have good production? 0.72x. This good production, what we are doing, we are delivering to the customer. After delivering it to the customer, out of this 0.72x, 12.50% is coming returned to us because it does not meet the specification. So how many is the good units which is not returned? 0.63x. This is the total finished goods after the inspection, after removing the faulty production. This is the sales returns. Total sales less sales returns. Now we get the goods not returned. What is the goods not returned? 28,000 is the goods which are not returned. That will be equivalent to 0.63x. Now what is the amount of full x? We have to cross multiply and find out. That is what I have done here. 28,000 is 0.63x. So 1x is 44,444.44. This is the x number of units. What is x? First we saw it. What is the number of materials we bought? Purchased number of materials. That is 44,444. This is what the x is. Now here I have given the chart. We have purchased 44,444.44 units. Out of that, 10% got scrapped. In the material stage itself, 10% got scrapped. This much units got scrapped in the material stage. This much is the remaining. Out of that, entire units is converted into finished goods. After that, producing 8,000 units. 40,000 into 20%. This much is discovered as faulty production. After that, remaining is a good production. This 32,000, what it will be done? It will be delivered to the customer. After delivery, 12.5% will come back to us because of sales returns. This much is the sales returned units. And then, this is the units which are not returned. Good units as given in the question. Now, this is the chart which we have to understand. Here, what is the cost which we are incurring? In this scrapped material, the material cost is loss for us. This is a loss because we are unable to convert it into finished goods. This is scrapped. No, in this material cost is our loss. Along with that, production cost is also our loss only. After producing only, we are finding that it is faulty. Now, in this thing, the losses which we are incurring are material cost, production cost, delivery cost, everything we are incurring the loss because we have completed all the activities and incurred the cost. After that only it is coming returned. But for this we have one more additional cost also. That is the free replacement cost. We have to replace them for free because that is the company policy. Now we are going to see how much cost we are incurring because of this. Now total cost of quality they have given currently. The total amount alone they have given. We have provided the bifurcation. Loss from scrap of material. This much material we got scrapped for 1 unit of direct material. This is the cost. This is given in the question. In the cost data, it says that 1 unit of direct material is 35 rupees. Direct labor is 25 rupees. Variable overheads is 15 rupees. This is given in the question itself. This much units are getting scrapped material stage. This is the material cost. Okay. The next thing is loss after the production. After faulty production, we are discovering the loss. This much is the units which are found out. And then for 1 unit, 75 rupees is the loss for us. Direct material, direct labor, variable overhead. Everything we are adding because all the production costs should be added. Next thing is loss due to free replacement after delivery. After delivering means you will incur all the cost for production. Direct material you will incur, direct labor you will incur, variable overhead you will incur. After that, you will also incur 5 rupees extra for free replacement delivery. This is the data given in the question. Here, why this only 35 is taken? Because only material stage we are incurring the loss. Here 75 because after production we are incurring the loss. This is after delivery. We are giving free replacement also. So production cost plus delivering free replacement cost. Everything we are taking. By multiplying this, we will get the respective cost amount. If you total this, we will get the total cost of quality. The total is given in the question. As I already said, this is the total cost of quality which is given in the question. Now we are going to assess the impact of the proposal. Because of proposal, what will happen? This 12.5% will become 9.5%. This 20% will become 10%. Here there is no changes mentioned, so we can assume it will be 10% only. These are the changes which we have to make in the flow chart which we saw. This is the workings for after the proposal. After proposal, if we buy X number of units, 10% of material will go scrap. This much is the remaining material. That will be converted to finished goods. Out of that finished goods, again 10% will be faulty production which will be removed. This 10% was earlier 20%. After the proposal, it is reduced to 10%. Now, this much is the production units after removing the faulty units. This we will deliver to the customer. 0.81x delivered to the customer. Out of that, 9.5% will be sales returns. Now, this much is the good units. So, after the proposal, the good units equivalent is this x, 0.73305x. Now, we are going to find out what is the 1x value. 0.73305x. This will be equivalent to 28,000 units. So, 1x how much it will be? That is we are finding out. 28,000 divided by 0.73305x. This is the total number of units which we purchased as a material. X value is 38,196. Here is the chart. 39,196 units material we purchased, 10% scrapped in the material stage, remaining went to finished goods stage. Next thing is, these things converted into finished goods. Out of that, 10% removed after production. This much is the good production units. This much production units we delivered to the customer. Out of that, 9.5% we got back as sales returns. This is the remaining units which are good units. This is the chart here. Now we can see what is the impact on cost of quality after the proposal. Now, after the proposal, this much units is scrapped in the material stage. This much after the production. This much is sales returns. Now we are going to assign the respective cost. As we saw earlier, in the material stage, only material cost. Production stage, full production cost. Here, full production cost 75 plus 5 rupees for free replacement delivery. Total cost of quality we are getting is 626, 635. Now we can see the difference in cost of quality. Earlier we incurred some 10 lakh, around 10 lakh we incurred. Now after implementing the proposal, only 6 lakh we are incurring. So we can see the savings, around 4 lakh it is coming. 4,48,000 is the actual savings. For that, how much additional cost we incurred? 4,50,000 for a training program and quality control program. 50,000 for the quality control consultant. This data is given in the question. This much is the additional cost incurred. This much is the savings obtained. So net loss is 51,000. We spent 5 lakh but recovered only 4.5 lakh savings. This is the net loss to the company. One thing we have to note in the solution is that in the solution they have asked the quality control cost statement. So they have classified the cost into external failure, internal failure like that. So we have to understand what is the classification here. For scrap of material, it is an internal failure cost. How it is an internal failure cost? As we saw already in the concepts, it is an internal failure cost because it is incurred to rectify the defect before delivery to the customer. Before delivering to customer, you found out the fault. Scrap or rework will come in internal failure cost. In internal failure cost, we will get scrap or rework. But in appraisal cost, what and all will come? Only testing, inspection, that kind of cost only will come in appraisal cost. And in external failure, whatever you incur after the delivery, everything is an external failure cost. So in this question, if we saw the material is scrapped before delivery to customer, it is an internal failure cost. Faulty items production, that is also found out before delivery to the customer, internal failure. This is sales returns after delivery to the customer, he is sending you back. So that is an external failure cost. You have to classify it accordingly and show it as a statement. That's all in this question. Next we are going to see question number 4. In this question, the company manufactures a single product which requires 3 components. 3 components are required for the single product. One of the components, the problem is only with one of the components. The one of the components, we have 3 suppliers for that. DE, PE and ZE. The following information is given. Every supplier, what is the price they are charging? That is given here for 100 units. This is very important. We have to note this. 240, 234, 260. And then percentage of defective of total receipt. If you get 100 units in D Limited, you will get 3% defective. 3 units you will get defective. If you purchase it from PE Limited, 5 units you get defective. In ZE Limited, you will get 2 units defective. If the defectives are not removed and detected, it will be utilized in production, causing a damage of 200 per 100 units of the component. If you do not detect the wastage and defective units and then use it as it is in the production, if you use 100 defective units, you will get 200 rupees damage. The total requirement, how much unit you want to purchase, that is 12,000 unit you want to purchase. The company intends to introduce a system of inspection for the components on receipt. Now, this is the current situation. Now the company wants to bring an inspection. So we have to analyze the situation before the inspection. That we are going to do it now. Now this is the statement for current situation. From each supplier, you have this much requirement units, this much units you will purchase from the supplier. Defective, this much will be the defective percentage. If you purchase 12,000 units, 360 will be the defective in D supplier. And in P supplier also, 600 units defective, 240 units defective. In the current situation, you do not have any type of filtering mechanism or inspection process. So all the defectives will be sent into the production process so that you will get the loss also. 200 rupees per 100 units of defective components. Now we are going to include the cost what all we are incurring. Purchase cost, 12,000 units for 100 unit, 240 is the cost. So we are including it in the purchase cost. 12,000 units, 240 is the price for 100 units. So we are dividing it and multiplying it. So we are getting the purchase cost for all the 3 suppliers. Next thing is production damage. Production damage is, if you use 100 defective component, 200 will be the cost. So how much will be the cost if you use 360 defective component? So because in the first supplier we are getting this much defective, we do not have an inspection process, entire 360 defective units are going into the production process. So 360 units, the production damage cost we are calculating and adding it in the cost. Like that in the respective supplier also, this much defective units will be going into the production process. For that we are including the damage cost. This is the total cost, purchase cost added with production damage for each supplier. Now we are dividing it by the good units. How much good units we are getting, that is what we have to see. The cost of bad units will also be absorbed by the good units only. 11,640, 11,400, 11,760. How we are getting this? We are getting the total requirement less defective units. We are getting the good units. By dividing this, what we are getting? Cost per 100 good units we are getting. If you divide directly, you will get 2.5361. But this is for 1 unit. If you multiply by 100, you will exactly get this amount. Divide it directly and then multiply by 100. You will get this amount correctly. This is the cost per 100 good units. This is the current situation. But they are trying to implement an inspection. Now we are going to see the details of the inspection process. The inspection process is that the company intends to introduce a system of inspection for the components on receipt. After receiving the purchase order, you will inspect those components. The cost of inspection is estimated at 26 rupees per 100 units of the components. If you check 100 units, you will get 26 rupees charge cost. Such an inspection will be able to detect only 90% of the defective components. If you make such an inspection, if you have 100 defective units within the purchase order, you will be able to find out only 90. That much only you can able to filter out. Remaining 10 units, it will go into the production process and it will also cost damage cost also. Now after proposal, what it is happening, we are going to see the cost statement. This is the cost statement showing the impact of the proposal. The requirement unit is the same, defective percentage is the same, but out of this 3%, 360 defect, how much we are discovering, how much we are not discovering, that is the matter here. 90% will be discovered, 10% will not be discovered. 360 defect, 324 discovered, 36 not discovered. Same like that, this much will be the defect, this much will be discovered, this much will not be discovered. Like that you have to filter out. After this, we have to calculate the cost. Purchase cost is same as the above, but one change in purchase cost is that you will not pay for the item which are defective. If you found any defective item, you will send that in return, you will not pay for those defective items. So, you have to pay only for the items which are not defective discovered by you. Now 12,000 units you are buying, out of the 324 defective you discovered. So, you will pay only for 12,000 items minus 324 discovered defect. Remaining you have to pay for this undiscovered defect, even though you will pay also. So, 12,000 you purchase, this much defective units you are not going to pay. For that, remaining only you are going to pay. The price is given here. Now, how the purchase cost will be calculated? 12,000 is the total units you purchased. Out of that, 324 you found out as defective. Remaining only you will pay. Out of this, the remaining you have to pay the amount. 240 is the price for 100 units. So, you have to find out the purchase cost by doing this calculation. You have found out the purchase cost for all the three. The next thing is production damage. The damage, how it will be caused? It will be caused by the defective components put into the production process. This much defect we cannot discover, and this we are going to put into the production process. So, 36 units we are going to put defective units. If you put 100 defective units into the process, 200 will be the damage cost. Like that you have to calculate the damage cost for the respective units. Next thing is inspection cost. How much units you are inspecting? Total 12,000 units also you are checking. Out of the 12,000 units, 90% defective you will find out. 10% you will not find out. You are going to pay for the inspection cost for full 12,000 units only, because you are inspecting full 12,000 units. You have to add the inspection cost also. It is 26 rupees per 100 units. If you add all the cost, you will get the total cost. As we saw already, we have to divide only by the good units. What is good units? 12,000 units you purchased minus 3% defective. Entire 3% you have to subtract, because all of them are defective. Whether you found out or not, that is not relevant here. This is the amount 11,640 is the good units which you purchase. The cost per 100 good units. As we saw in the above cost statement also, I have to calculate in the same manner. Now, cost per 100 good units has increased as per after inspection. Before, you got everything 253, 256, 269. But now everything you are getting 268, 63, 287. The cost has increased. So it is not financially feasible. You are incurring loss only. That is what they are saying. That's all about this question. Here now we are going to see question number 5. Here this is a long story. You can read it by yourself. The main point in this paragraph is that they have given some information for you. You have to analyze it. The information is, this is the cost data. For which activity, how much cost it is happening. That is given here. Volume, how much times that activity is done. The frequency is given here. Now what they are asking is that, additional information also they have given. Now they are asking total quality cost statement they are asking. Now, total quality cost statement, as we already know, we have to classify the activities and cost into prevention cost, appraisal cost, internal failure and external failure. As we already saw in the definition part and concept part, we know what is internal failure, what is external failure, what are all the costs which will come inside it. Here we have to understand that how much customer complaint center cost. It is rupees 35 per hour. If you have 1 hour of customer complaint center timing, for 1 hour you have to pay 35 rupees. How much hours actually it happened? Customer complaint center time, 2000 hours actually you spent on it. For 1 hour it is 35 rupees. For 2000 hours it will be 2000 into 35. Like this you have to find out the cost for each of the activity. 3200 bike is the manufacturing rework. You have to spend 228 per bike. 2600 is the repair cost, warranty repair. 1560 is the cost. 1600 is the hours you spent on production equipment testing. For that 18 is the cost. 2000 you spent on customer center. The cost is 35. Like this you have to multiply and find out the total cost. After that you have to classify. The classification I have given in the solution. This is the solution. Here I have classified using the 4 categories, and then you can identify what are all the categories. And in the question, they have given 2 important information. They have introduced a supplier review program. Supplier evaluation will come under prevention cost. And then downtime also they have given. Downtime is not about the prevention. It's not about appraisal also. It is not after delivery to the customer also. So it will come under internal failure. Downtime, scrap, rework, that and all will come under internal failure. Why it will not come under appraisal means, it is not a testing or inspection. It is just a downtime. So it will be coming under internal failure cost. That's all about question number 5. Now we are going to see question number 6. In this we have a company which is manufacturing component for cars. They are preparing a spare part. Car manufacturer are the primary customer. The raw materials are bought, assembled, and electronic car components are sold. They are doing the typical business, buying the raw material, assembling it, and selling it as a finished goods. The market demand for these components is 5 lakh units. In the entire market, this much will be the demand. Out of this 5 lakh, our company is selling 1 lakh units per annum. 20% market share we have. Now, this is the cost data for the product. Selling prices, this much, raw material cost, assembly cost, delivery cost, contribution, everything they have given. Now, they have given an important paragraph. This is the important part in this paragraph. Customers, due to defects in the product, return 5,000 units each year. Every year you are selling 1 lakh units. Out of that, 5,000 is coming as a sales returns because of defect in the product. They are replaced free of charge by Cool Air. You have free replacement policy also. The replaced components cannot be repaired. You cannot repair it. You do not have any scrap value also for that. So, you are losing your reputation because of this bad components. If these defective component had not been supplied, the sales returns due to defective units will be nil. This 5,000 unit you are getting sales returns. No. If you do not supply the bad component, the sales return will not come. The customer perception about quality also will increase. You will have a good reputation in the market. Because of that reputation, you can get more sales. It could yield a 10% increase in the market share. The demand will increase to 1,50,000 units per annum. Now currently you are selling 1 lakh units per annum. Now if you do not make the bad component, you can sell up to 1.50 lakh units per annum. This is the information they are giving. Now what they are asking you is that they are asking a cost of poor quality statement due to supply of defective item. Now we can see the solution. Now we are going to see a solution. In this we have to see one important calculation. In the question they have given the data, raw material cost, assembly cost and delivery cost. These three are the total production cost for the product. If you produce one product, you will incur 1,500 cost in total. And then they have given the details about sales price and contribution also. The sales is 2,500 rupees per unit, contribution is 1,000 rupees per unit. This 1,500 variable cost is the cost of production which we saw below. Now in the current situation, what are all the problem we are having? One thing is sales return we are getting. For that sales return we have to give a free replacement. And the return product which we get, that also we cannot do scrap or sell it. We have to make it for disposal without getting any return also. Now when you have one sales return unit, what you have to do is that you already incurred cost like raw material, assembling and delivery for that, and you have to give a free replacement now. So again you have to incur the cost of raw material purchase, assembling and delivery, and this 1,500 cost, production cost which you are incurring additionally is a loss for you because of the sales return. This is for one unit, but for 5,000 units the total loss will be 75 lakh rupees. This is the production cost for one unit. 5,000 units you are going to again produce and send it to the customer. This is the loss for you. The next thing is lost contribution. You might have sold 50,000 units more if you did not produce bad components. So you lost 50,000 units of sales because of selling bad component. We are taking contribution per unit for those lost sales. We do not take into account fixed costs while taking these decisions. So we take contribution. 1,000 per unit is the contribution as we already found out. For one unit, for 50,000 units, this is the lost contribution. These both are lost due to sales returns and lost contribution. These are all loss for you. The total loss cost is 5 crore 75 lakhs. This is the current situation. Now they have a proposal. We are going to read it in the question. Now, the second part is what we have to read now. The company management is considering a proposal to implement an inspection process immediately before the delivery to the customers. This would ensure nil sales return. Now, by implementing this proposal, what will be there? There will be 0 sales returns. This is what they are giving in the paragraph. The cost of having such a facility would be 2 crores per annum. The additional cost for implementing this facility will be 2 crore rupees per annum. This cost will include material, equipment, etc., etc. They analyze the net benefit they are asking. Now we are going to see the solution. The solution is that this is a proposal for inspection before the delivery. So what will happen is that you will produce the defective units, but you will not deliver it to the customer. Before delivery, you will remove those. So production cost for the defective units will still be incurred. Now, additional cost of facility. If you want to implement this proposal, it will incur an additional charge of 2 crore per annum, which we saw in the question. Increase in contribution. By contribution increase, what we are telling is that if you do not make any bad product and do not make any sales returns, you will be selling this 50,000 units also. In this 50,000 units, you will get 1,000 rupees contribution. That is what they are saying. In the current situation, this is a cost for you. You lost it. But after implementing the proposal, this is a savings for you. You will get additionally this much contribution. And then loss from faulty production. Now after the implementation of proposal, how much you will make faulty production? Earlier you were making 1 lakh units. Out of that 1 lakh units, 5,000 units were the defective. So the defective rate is 5%. Now you are producing 1,50,000 units and selling them. Just that the sales returns are nil. In that 1,50,000 units, if you apply the 5% rate, you will get 7,500 faulty production. 5,000 already you are producing, 2,500 units you will produce faulty production in the increased sales which you are getting. The 50,000 units extra sales you are getting, no. In that you will get this much faulty production. So for 1 unit of faulty production, you are not delivering it. So what will be the cost incurred? Raw material you will purchase, assembly you will purchase, production you will do, but delivery you will will not do for those faulty production, because you are removing it before delivery using an inspection process. So the cost will be 900 plus 500. 1400 will be the cost per unit of faulty production. The total faulty production is 7500 units. 7500 into 900 plus 500. So the total cost of faulty production loss is 1 crore 5 lakhs. Then next is reduction in loss from sales returns. Earlier you were incurring 75,000 loss from sales returns, but now this is a savings for you. So you are adding it in the positive side. 75 lakh positive, you are adding it. Now if you analyze the net benefit, 2 crore cost, 5 crore benefit, 1 crore 5 lakh cost, 75 lakh benefit. Totally net benefit is 2 crore 70 lakhs from this inspection before delivery proposal. They have given another proposal also independently. We are going to read that also. This is the third part we are going to read now. Quality control investigations reveal that defective production. Why they are producing defective units? It is because of low quality raw material. From a large base of 30 suppliers they are purchasing. Currently they do not have any inspection at the purchasing stage. When you purchase the material, you are not checking whether it is proper or defective. Now they are bringing a proposal to have inspectors. After purchasing the material in the procurement stage itself, in the material stage itself, you will check whether it is good raw material or not. By that you will remove the defective raw material, so that you will not make any no faulty production will be there. All the production which you do will be good quality, because you are removing the defective raw material first itself. Any defective raw material component will be replaced free of cost by the supplier. There is no additional cost for replacing the defective raw material. This will ensure that no product produced will be defective. All the products produced, 100% products are of good quality only. No bad quality product is produced. This inspection quality control will cost 4 crores per annum. Now we have to analyze the net benefit. Here they are also giving an important note that scenarios are independent or not related to each other. In the current situation we saw in the first question, and then in the second part we saw one inspection before delivery. That is separate. If you do implement inspection before delivery, that is a separate concept. But when you are reading the third question, you have to read that the inspection before delivery, that you have to forget. Now this is the only proposal which they are doing. You have to compare the current situation and the proposal and find out the net benefit. Now we are going to see the solution. Now in the solution we can see that the cost of inspection 4 crore per annum is an additional cost, it is a negative, and then increase the contribution. Now we are going to make only good products, so we will not have any sales returns, so our sales will also increase by 50,000 units per annum. For 50,000 units, 1 unit we have 1,000 contribution, so this much contribution we will get increased contribution. Next thing is reduction in loss from sales returns. If you do any sales returns, it will be a loss for you. How much it will be loss for you? We already calculated in the first part, 75 lakhs. That loss we will not be incurring now. That is a savings for you now. So it is a 75 lakh positive we are adding. There is no other additional cost here. No faulty production. So no faulty production cost also. There will be no faulty production cost. That also will not be there. So this is the net benefit in this proposal number 3. Cost of inspection, increased contribution, reduction in loss of sales returns. The net benefit is 1 crore 75 lakhs positive. The next part we are going to see is that they are asking in the question which is the best proposal. Either proposal 2 we can implement inspection before delivery, or we can implement proposal number 3, inspection at procurement. Now what is the proposal which we have to implement? In the second proposal we are getting a benefit of 2 crore 70 lakh. In the third proposal we are getting a benefit of 1 crore 75 lakhs. Now if you get if you see in the financial perspective, second proposal is giving you more money. So that is the best proposal in terms of profitability. But you see long-term business perspective, producing faulty product and then removing them is not good when compared to not producing the bad product itself. That is even more good for the company. So in the long-term business perspective, inspection at procurement will be the correct thing, as it will remove the faulty production entirely. You will inspect the components at the procurement stage itself, and you will make only good quality product production. That's all about this question.